Look, altcoins have been on a massive run during the start of this year, but at the same time, a lot of people have been feeling FOMO. A lot of people have been feeling like they've been missing out on most of those gains. Well, now we've had that dip, we've had a dip in the market, and now could be a good time to start looking at these altcoins with strong and solid fundamentals, which could go back up again. So, let's take a quick look here at the total crypto market cap, excluding Bitcoin and Ethereum, which tells us what altcoins are doing as a whole. And then we can see that over the past several days, the altcoin market cap has taken a bit of a hit and started consolidating sideways. We can also see that this same sort of pattern has happened multiple times since the start of the year, and each time has been followed by a recovery and push to new highs. If this pattern continues, then now would be an ideal time to look at some altcoins. That is why in this video I will be covering some specific altcoins as well as some general categories I am monitoring and what would make them attractive opportunities to consider now that they have retraced some of their recent gains. Also, what I will say is that we're in the middle of a massive attack on crypto from the SEC and different regulatory entities. So of course we still have to keep that in mind, that we could see some news come out which takes the altcoins down lower. But at the very least, I want to talk about these altcoins so that you are prepared for if that is not going to happen. If we see a continuation in the altcoin market, these are the coins I would definitely consider and I would keep an eye on. So let's talk about it. So the first coin I want to cover today is Matic, which is the token for Polygon. Polygon is a project with a growing number of products related to helping scale Ethereum. It has been around for a while now, and the Polygon proof of stake sidechain has become the 5th largest blockchain by total value locked. Polygon has also been successful in building partnerships with non-crypto companies such as Instagram, Adidas, Reddit, Prada, and Stripe, which helps build further awareness. However, the reason I chose Polygon actually has to do with one of their projects which is not yet live, and that is their zk VM Layer 2 scaling solution. So what is this? Well, in the past, Vitalik Buterin has been a strong proponent of zk rollup tech as being the most promising way to scale Ethereum. And if we take a look at the CoinGecko list of ZK, which stands for Zero Knowledge, most of these projects have really started rallying in the past week, but Matic has remained relatively flat so far in spite of the team and quality of the project already being proven and it having a live product launching in the near future. The zk VM final testnet went live in December and the mainnet launch is scheduled for Q1, and that is most likely gonna be sometime in March. The Layer 2 will be fully compatible with base layer Ethereum, meaning it will be able to support existing smart contracts, and all the tooling and infrastructure that already exists will be compatible with it. So this is of course the big thing. And also one other potential catalyst for ZK projects such as Polygon is a new EIP that has been introduced, which would further improve interoperability and stability between Ethereum and ZK rollups. So if you thought that that was a little bit too technical, well, let's talk about something else, because next up we have a category of altcoins that could stand to benefit from actually the recent regulatory actions in the US, and that is liquid staking derivatives. So, as you've probably heard about already, I've been talking about it, but Kraken just settled with the SEC and agreed to pay a big fine and close down their crypto staking service, including their staking for Ethereum. Now, whether or not this was due to other aspects of the staking service or whether the SEC is going to go after other Ethereum staking service providers such as Coinbase is still up in the air. However, it is very clear that investors are worried about that possibility, as shown by the drop in Coinbase's stock price after the news about Kraken broke. However, this could benefit the projects offering liquid staking solutions, as stakers may look to preemptively move their staked Ethereum in the case of Coinbase or be forced to go elsewhere in the case of Kraken. This dashboard shows us that the Coinbase and Kraken are the second and third largest Ethereum staking service providers, with around 3.3 million Ethereum staked between them. Some altcoins that provide liquid staking services are Lido, Frax, Rocket Pool, and Anchor. If we take a quick look through these charts, we can see that each of these altcoins have recently dropped 20 to 25% from the local highs. An important note here is that the effect of this catalyst likely will not be fully felt for a while, as staked Ethereum withdrawals aren't expected until mid to late March. So that is really when we could see a bunch of Ethereum being staked on these projects, potentially propelling the price to the upside. So not too far away in the future, but a little bit of a heads up there. Moving on, let's take a look at Phantom, a layer 1 blockchain that is EVM compatible but utilizes a unique consensus mechanism which sets it apart from other chains. The Lachesis consensus protocol not only secures the base Phantom chain but can provide security to multiple execution layers, meaning an entire ecosystem of purpose-built chains can be created around it. During the rally we've seen since the start of the year, Phantom has done really well, but has more recently retraced around 30% to the previous level of support. There are, however, some catalysts Phantom has going for it, including a treasury providing 30 years of runway, a newly launched ecosystem fund which is funded using 10% of the chain's transaction fees, and the return of the popular developer, the legend Andre Cronje, to the Phantom team a few months ago. He is well known for being able to generate a lot of hype around the project he works on, and he has already announced some big plans for Phantom in 2023. The team's primary goal for the year is to grow the ecosystem of dApps building on Phantom, as well as to further differentiate the chain from other layer 1s. They also plan to boost adoption by offering gas subsidies for protocols, meaning users won't need to own Phantom to start using the chain, removing a major barrier to adoption that nearly all crypto projects already face. Phantom is also working on the development of their own Phantom virtual machine for greater scalability and increased execution speed. Another key aspect for Phantom is FVM, which Cronje has been discussing for months now, and that is Z-key proofs, meaning Phantom may also benefit from the Z-key narrative that has been emerging recently, but similar to Matic, it has yet to see the boost in price other coins in this category have received. Next up, we have another category, and with this one, as well as the previous, you can customize your strategy and positioning to best fit your personal risk tolerance and preferences. For example, if you want to take on more risk for potentially greater rewards, then you could focus on the smaller market cap coins in these categories. The second category is tokens on Arbitrum. Arbitrum is one of the most popular layer 2s for Ethereum, but has not launched a native token yet. Token incentives play a huge role in growth in the crypto markets, which makes the success Arbitrum has achieved without a token so far pretty impressive. It is the 4th largest chain by TVL, has over 60,000 active daily users, and is home to many popular protocols. As we can see here, Arbitrum's TVL has been trending upwards since mid-2022, deep in the bear market. One reason for this is that people are interacting with the Arbitrum ecosystem in hopes of being eligible for a potential airdrop of a native Arbitrum token in the future. While there is no guarantee that such an airdrop will take place, nearly all popular layer 2s have ended up launching a token. Looking at those prior airdrops also reveals that after airdrops, money generally starts to flow into the tokens of other protocols on the chain as everyone looks to take advantage of the hype. This means that looking into altcoins on Arbitrum now, before an airdrop, is confirmed could help place you ahead of the trend. To find those coins, you can check out Arbitrum ecosystem page here on CoinGecko as well as on DeFi Llama. Something else I want to talk about today is a new feature on KyberSwap. KyberSwap, of course, long-term partner of this channel. I've covered this project before, but if you're unfamiliar, KyberSwap is a leading DEX aggregator and AMM with concentrated liquidity. Essentially, KyberSwap checks the price of whatever token you want to buy or sell across thousands of other DEXs and then gives you the best rate available. Now, they've made the platform even better for traders and investors by adding support for limit orders. Limit orders, of course, allow you to specify a price at which you want to buy or sell a token, and then if the price reaches that level, your order is then executed. This allows you to do your analysis, decide where you want to make a trade, and then set it and relax while you wait. Limit orders are a fairly standard feature for centralized exchanges, but have not been integrated as much on-chain, so this helps set KyberSwap apart from other platforms. Even better, Kyber does not charge any fees on limit orders like you may have seen on other exchanges. When you go to place a limit order trade on KyberSwap, you will see this interface. You input the amount of tokens to sell here, the price here, and then choose when you want your order to expire. Being able to set an expiration for orders is useful in case, for example, you think price may dip overnight, so you want to have an order ready to buy lower, but have that order expire the next day if it does not end up getting filled. This feature was also developed 100% in-house by the Kyber team with security in mind to eliminate any third-party exploitation risks. Right now, limit orders are live on Ethereum, Polygon, BNB Chain, Avalanche, and Arbitrum, as well as Phantom. So if you use any of those chains, then you should definitely give Kyber Swap a try next time you want to buy or sell some tokens, especially considering what we talked about previously with Arbitrum, potentially launching that token. Then why not use Kyber on Arbitrum to be eligible for that airdrop potentially? So guys, make sure to check out Kyber, links down in the description. And that's what I got for you guys. Thank you so much for watching this video, and I'll see you in the next one.